Welcome everyone to the weekly crypto recap show where we go over all of the latest news from the week in crypto. Thank you so much for joining us today. I am broadcasting to you live from San Francisco today. So a little bit different from the West Coast, you could tell, because I'm from the East Coast, you could tell because I'm in short sleeves. I haven't done that for a while. Welcome to the show, Chris Karabat, aka Zaphoid from Smart Cash. Always to have you on the show.
Well, I'm happy to be here, even though my background is green today.
Your background is beautiful. It's lovely.
If it was normal, you'd see a good flag behind me, maybe a logo here and there. Spent a bunch of time on it this week, but you know.
Something representing like anarchy or, you know. Yes. Exactly. So we've got a lot of stuff to cover today, and I think the biggest news from the week is all of the Bitfinex stuff, and it's kind of taken over a lot of people's chatter. So we are going to cover that. We also have a special guest. We have Ash Oro from Smart Cash joining us later on. He's going to hop in, give us some EOS news. Pardon?
Ash Oro from EOS.
Well, you call it EOS, like whatevs, you know? EOS, like EOS. Other people might call it, who really knows? So yeah, so it's going to be a pretty awesome show, lots to cover. Let's go straight into it. I want to start off not with all of the Bitfinex, Tether stuff that's going on, which gets pretty complicated. Instead, I want to start with the ATO, the Australian Taxation Office. So I have a lot of thoughts about this, but let me give you a brief overview of what's going on. They're basically saying that they are ramping up data matching in cryptocurrency, pursuing a big crackdown in crypto, making sure that they know that no one is avoiding a tax that they might be owing in crypto, and they're using a lot of like data forensics and analysis to try and match people with their crypto accounts and all that kind of thing. So it's really ramping up in Australia. It's like getting pretty intense there. What are your thoughts on all of this, Chris?
A few different directions that I was looking at. One thing, every article about this has the same 3 key points. The first point is that they want to ensure people trading in cryptocurrency are not underpaying or avoiding tax, because, you know, that would be the worst thing ever.
That would be the worst thing ever. Gosh, you know.
The second
How
point
is kind of a follow-through. Chris?
The second point is, you know, kind of tied to the first. Just so you know, you're probably liable for capital gains if you've been trading in Bitcoin. But the third point is my favorite, because everybody uses it whenever they talk about Bitcoin or crypto, is that the ATO said cryptocurrency had been used to move funds within the black economy and hide money offshores. Because, you know, how dare you hide your money from the government?
How dare you try to have financial autonomy? That is terrible. Don't do that.
Yeah. I've actually talked to people who are involved directly in this and have letters and such from the ATO, and they're actually being quite serious and sophisticated. They are evaluating the blockchain. They're looking back, you know, 8 years in time and realizing that you have mined blocks. So, you know, you obviously owe the money for this. And since you have no records of selling it, then the taxes you must pay on it, of course, are what it's valued now versus when you probably sold it back in 2010.
Oh my
so
God.
You have to, you know, essentially these people may have to liquidate everything just to pay fake taxes. And also not only that, but they see that, okay, so you were mining in 2010 or whenever this was, years ago. They have no concept that you might be CPU mining. So obviously you bought a bunch of equipment to mine Bitcoin back then. So obviously you were investing heavily in this, and we need to see all those receipts for that equipment that you bought, obviously, even though no, you could buy it on your CPU back then. It was easy. Anybody could do it.
Yeah.
It was supposed to be 1 CPU, 1 vote. We remember that old thing from the white paper. So it's pretty critical. And we all know that any fights you get into with the tax people, they're of course saying that, well, if you just accept the settlement now, great. But if you fight this, then there's all these other fines we're going to throw on top of this when you inevitably lose.
Yeah, it's really terrifying. I mean, all of this is just to try to scare people out of not using cryptocurrency. I mean, we're seeing, and we're going to talk a little bit later on about Japan and the G20 and what's going on there. And this fear that you see governments around the world have with cryptocurrency, they really realize that they're losing their grip. They realize that there are a lot of people who are going under the radar. And I mean, and when you talk about like taxation in Bitcoin, it just makes me so angry, because there's also this strange rule that the ATO is playing with at the moment, where they say if you are not a trader, like a short-term trader, if you've held, like you're more of an investor and you've held your currency for more than 12 years, then you might be eligible for like a 50% reduction in the capital gains or something like that, you know. It's like, where is it? Let me pull that out there. It's let me see. All right, I'll grab that in a second. But I mean, they're playing with these strange things here, and it's like, on the one hand, you know, I know that'll help a lot of people who are like hodling and not selling and whatever. But on the other hand, this was created to be a money. You know, this isn't about moving funds in and out and trading and all of that and then getting capital gains. Like, if you're getting crypto and then getting rid of crypto, you're also just as likely to be using it to purchase things, which is what lots of people were doing 8 years ago, 7 years ago, 6 years ago, 5 years ago. Like, I mean, this is what people did with cryptocurrency. So it just makes me so angry that the government has honed in on this. Oh, you know, this is subject to capital gains. Like, they're not treating this as a currency. It makes me really angry, especially considering the name is cryptocurrency. Like, you'd think that would have some sort of sway in how it's defined, but it's not when it comes to taxation offices around the world. They consider these assets that are subject to capital gains. It makes it incredibly hard to move funds around to use them for what it was designed for, and it makes me really, really angry that they're now really pressing forward with this data analytics and trying to piece together like identities associating with them with different addresses, and say like sending people bankrupt. Like, they're really hurting a lot of people. If you were dabbling in cryptocurrency longer than like 3 years ago, you know, things were not as refined as they are now. Even now, it's really difficult to keep track of all this stuff. But imagine when it was like early days and someone just sends you, oh, here's 20 Bitcoin, you know, play around or whatever. And suddenly, you know, you're playing with this thing, you lose it all, or, you know, it's in a wallet somewhere, or you like, so many things could have happened back then, and you didn't really care because it wasn't like it was worth $6,000 that it is today. It was just this plaything that people were moving back and forth. So it's really disgusting that the governments are coming in and saying, well, now, because you held that and you still have that somewhere, even if you don't have access to it or whatever, or if you sent it back and forth, you owe all of this money. People don't have the money because, like, we didn't know whether it was going to be treated as an asset or whatnot back then. We just presumed that it would be a currency, you know, magic internet money, which is what it was called. So it's just really, really, it really distresses me to think about this.
Well, it's not only that, but if you look at it a little wider screen, I mean, right now, Australia is looking at lowering their interest rates again. And there's always been talk about going cashless, et cetera, et cetera. And this is all part of making sure people are afraid to use these alternate currencies, so they're less likely to hide from the negative interest rates, which I assume Australia is going to follow some of the European nations into that, and keep you from wanting to play with this to hide your money from them stealing your money from you in your bank account. So this is all about trying to add just fear. And sure, I mean, I'm sure that part of this is somebody got a new tool that they related to the people who built this crypto tool, and they said, hey, you got to use this to up your revenue. You'll make billions of dollars more in taxes that these people have been hiding from you. So some tax person's all gung-ho about
you'll be able to extort millions more from people who can't afford to pay it, and send heaps more people destitute. Great job, government. This is really helpful. Yeah, no, it's this is not what crypto was built for. And I think that more and more it sort of highlights the issues that Bitcoin had right at the start, which was that it was a completely transparent system. And it really, it's so funny when you think about the narrative of Bitcoin early on, and it was all about the drug dealers and the cartels and the money laundering and hiding all this stuff. And really, the people in crypto were saying, no, this is really too transparent. We need more privacy functionality in this. And the mainstream media didn't care. This was like the tool for the terrorists, right? And now what we're seeing is that it's getting easier and easier to track this stuff and to associate, people with addresses, etc., whether they're logging IP addresses or whatever they're doing. And I think that privacy is really going to become a far more important aspect of cryptocurrency than it had been before. People playing with this and figuring out, like, is this a system that is actually going to be useful, etc. Now we know that it's useful, but we also know that for curtailing government or whatever, it's just not helpful.
Exactly. And privacy is going to be very important. I mean, right now, your dollar bills, your cash is still the least traceable form of money out there. Outside of some of the very specific privacy-oriented cryptocurrencies, cash is still guaranteed that the government will not know where that dollar bill or where that $100 bill more likely has gone, which is why so much of it is used for cocaine and whatnot. But just because a lot of the criminals may or may not have been the first people to use it, that doesn't really matter. That just means that the people who were using it were the people who were least served by the current system. And as time goes on, as all of this collapse, inevitable collapse in my mind, but as all this upcoming recession and trying to stamp down on individuals, they're just making the case for government-free money. When we talked about the former head of the Swiss banker in a couple episodes ago, and he's talking about, the banks are just going full tilt down towards negative interest rates and cashless societies without any concern about how that serves the populace.
Oh, it's absolutely disgusting, Chris. I mean, what they're doing in the traditional financial system is hurting so many people, and that is why crypto was created. It was created because of all these giant bailouts for banks, because our money is being inflated away. No one's really talking about this, and the only real solution we have is to create a system that doesn't need these central authorities in order to operate. It's permissionless. It doesn't need points that the government can focus on or leverage or shut down. Like it can circumvent all of that and create a better alternative to people who are being hurt by the system, which honestly is all of us, although the costs are dispersed enough that people don't really talk about it. But the costs are severe and there, and we should be talking about it a lot more.
And they're dispersed enough in our, most of the Western world. I mean, obviously, all you have to do is look in Africa and South America and see what hyperinflation has done in our lifetimes, much less beyond it. And then you have, of course, Bernie Sanders' economic advisor going, oh, don't worry, it's not like the USA can ever run out of dollars, as if that means anything. Like, I mean, they actually say that realistically is, don't worry, we'll never run out of resources, when that's obviously not the case. We can print all the dollars we want. It's not creating any more resources. And that's the whole point of money, is an exchange for resources.
Yeah. It's so, I mean, this stuff is happening in governments all around the world. Australia is small enough that they have more of a laser focus than a lot of governments around the world. So that does make it scarier in some respects. But I just think people should be careful in crypto, because you can really get hurt out there. If you're trading back and forth, if you're not cognizant of the fact that governments are trying to monitor this closely and are trying to track down people who have been buying and selling and might owe taxes, like, you could get really, really hurt. So just make sure that you are being careful out there, and start exploring, different currencies out there that can help give you more financial autonomy. Because really, I mean, the current system as it stands at the moment, it's just so harmful. It's so harmful. So I'm really for any technology that helps, give people a high standard of living, that helps give them back some of this financial freedom that we've had in the past. So just be looking around for some of the tech that provides that.
Absolutely. There's lots of options out there. We might even mention one later in the episode.
Yeah, we might mention one later in the episode. All right, so let's move on. So the next thing I want to talk about is this site called Blockchain Transparency Institute. So they've put out their April report, which is called the Market Surveillance Report. In the past, we've talked a lot about how there's a lot of fake volume on exchanges out there, and sort of the consequences of this. So there are different kind of third-party private institutions that are coming up and trying to fight this, without getting government involved and saying, we need to stop this and have a law. There are people that are tracking this. And so there's this market surveillance report that's just come out that talks about wash trading. And Chris, you want to elaborate on what this report says?
Well, basically, it's reporting that somewhere around a little bit over 90% of the overall trading volume across all the exchanges is what's called wash trading. What wash trading is when you're on both sides of the buying and selling side. It's essentially fake volume. Exchanges across the ecosystem have done this, and this institute is evaluating popular trading pairs at all the top exchanges to figure out how much of it is real trading versus how much of it is wash trading. And of course, as we all might have expected, 99% of trading on a bunch of these big exchanges is wash trading, is fake. They're not real people intending to buy and sell. It's just creating fake volume so these exchanges can look better and more attractive to users, and they can charge more to coins for listing.
Right.
So this list here, they're trying to go through the top exchanges and list them as, BTI verified. So ones that have less than 10% wash trading. And, some of the expected ones, obviously Coinbase, Bittrex, Upbit, some of those ones are verified. And then, of course, some of the expected ones aren't, like whoever BTC is with 1.4 trillion dollars of
So a
volume.
lot of volume there.
Yeah. We've all heard of them. I'm sure they have like 20 Twitter followers.
They're the greatest. Such a visibility in the crypto space for all the hard work.
Yeah, and they say overall, the overall BTC trading volume any given day is hugely overstated, and maybe what do they say? $4 to $5 trillion a day are traded across all the exchanges. It's actually legitimate versus however much they say is now, which is much more than that. I'm trying to find their actual number here, so I'm not talking out of my butt, but I scrolled around too much and now I can't see it again. But basically, a lot of the reason is this wash trading, and a lot of the reason they're trying to do this is to make the crypto market look more reasonable to regulators, because a lot of the reasons the regulators aren't approving the EFT or whatever is the market's immature and there's all this crap going on and it's too.
Well, that's what they say, right?
That's what they say.
I mean, they claim like, oh, because they could be fake trading out there. Like it's not their job to protect us from that. It's their job to just make sure that people are transparent about the product and that are letting people like disclosing information, saying yes, there are risks involved. It's not their call to make a judgment on these assets and say, these are not allowed. But that's basically what they're doing by holding back any licenses and ETFs and things like that. They're kind of keeping that control that they really shouldn't have.
Yep, and they exactly, and so they're trying to remove their excuses by exposing what's really happening, and that's useful too, because
it is useful because they get rid of the excuses. I get that. Like even if they're not like legitimate reasons that they're using, I do think that it's helpful. Like I love market solutions because we talk a lot in crypto about the bad things going on, and you hear this a lot of rhetoric that it'd make you think that everyone in crypto is okay with this bad stuff going on, and that it seems fine. Like that's not the point. I think a lot of people in crypto have this mindset of it's not okay, I'm going to choose not to use it, or I disagree with it, but that doesn't mean I want the government to come in and get involved with that. It doesn't mean that I think that there should be a law against this. It just means that I think it's bad behavior. People should be aware of it. So having these institutions that are just private third-party institutions that are verifying these things, they're providing a tremendous service for people and kind of showing how the market can create solutions to this, and you don't really need the government to step in and make these rules that tend to just favor their crony friends. Let's be honest, they don't really help protect us in any way. They just kind of make the system more convoluted and create barriers to entry.
Exactly, and it's interesting as we watch this because it is young, it is unregulated. People are trying to gain the metrics however they can. They mentioned that you can have an exchange like Binance for $850, and just for $100 more, they'll wash trade you into the top 10 on CoinMarketCap. And that's that's why a lot of these know nothing exchanges are showing up, hoping to get rich off of people flooding into their exchanges to trade on their fake volume.
Yeah.
So if you ever put up a real order at some of these exchanges and wonder why, despite all this activity, nobody's biting, probably why.
Yeah, exactly. So let's move on. I want to talk a little bit about financial institutions, institutional investors. There's a report that just came out, and Tua Demista had a great tweet kind of outlining a summary of what this report said, that talks about the percentage of institutional investors that are already involved with crypto. It's actually quite enlightening. It's interesting statistics here. So we've got 22% of people already have exposure to digital assets. This is in, they basically took a survey of 400 US institutional investors, and 47% view digital assets as having a place in their portfolios. That's like half of crypto assets should have a place. That's pretty interesting.
Yeah, I thought that was enlightening, and just goes to show you, despite everybody losing hope in the bear market and all the, oh, we're going to zero, yada, 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 the real people who pay attention to money and markets are still paying attention to crypto. And indeed, I bet you if we did this, survey a year ago, it'd be a lot less than 22% who had exposure. So this is positive. People are paying attention and moving in. And half of those who think that digital assets should have a place in their portfolios would buy directly and hold directly, and then half would also go for a VC equity fund. So I thought that was quite positive and higher, way higher than I thought it would be right now.
Yeah, me too. You kind of hear the chatter, but a lot of people, I mean, they're talking about, I think I read something about the London Stock Exchange, that again, they put out yet another headline that says London Stock Exchange is looking at the crypto market and waiting and analyzing and trying to decide if there's an interesting blockchain application before making a move. And it's like, they've been doing that for 10 years now. It's these big institutional players that keep saying like, oh, well, we're watching it very closely, as if that's a good thing to do in an industry that is moving at lightning speed. They're not taking the plunge. They're kind of sitting back and surveying, which is what I expected. So a report like this that kind of shows a lot of institutional players who are getting right in there, it's very interesting. And as you said, Chris, higher than I expected as well.
Yeah, I'm overly positive about this. And Fidelity has been moving in this place also. They allowed paper trading of Bitcoin a couple of weeks ago, which is basically fake trading to test and evaluate the market. And they're going to be moving forward with this, and it's going to keep getting easier and easier for the average person to access this, even though obligatory. I prefer everybody buys and holds their own crypto versus going through some of these institutional places. But at the same time, more access is more access. And if this is how we can get grandma into it, then this is what we need to do.
Exactly. Let's go on to Bitfinex. It's there's so much going on. So if anyone has not been following what's been going on, we did cover it in a previous segment that I did, but basically it's come out that before, when you said that Tether, it was backed dollar for dollar, every Tether was backed by a US dollar, there's a vault, all the money is stored there. And then they changed their terms of service about a month ago, I guess it was now, where they started saying, this is being backed not just by assets, but also by debt instruments as well. And everyone kind of flipped and they're like, what? See, I told you Tether was a scam. I think a lot of people presumed that was happening all along, because if you think about money just sitting in a vault, it's not doing anything for you. They're losing 2% of the value of it each year in inflation. Like, are they really going to let it sit there? And so I think a lot of people just presume that there's a lot of fractional reserve going on. It's being loaned out a lot of the time. And so when that news came out, people felt quite vindicated that this was what was going on. And then it came out that you had the New York Attorney General basically saying that there's this big giant cover up, $850 million, I believe it was, of Bitfinex. There was a loss there, and that's been covered with the funds that were being stored to back Tether. And so there was this kind of cross commingling of funds, like consumer funds with other funds, and it all kind of is a little bit murky there. And now everyone's going crazy again. But I think that my biggest takeaway, and now I'd love your opinion on this, Chris, but my biggest takeaway, I think Caitlin Long really summed it up, where she's saying that you know, this is bad, and we should have standards, and we should be talking about this, like how we don't like this in the crypto space. And we had the proof of keys on January 3rd this year, which was like a big thing everyone jumped on, which was like the idea of pulling all your money out of exchanges at the same time to prove that they actually had it fully backed there. Now, so that's a like big part of the ethos. But then someone like Caitlin Long said, like, while we should be wary of these practices, really all we've learned from this is that they're doing the exact same thing that every other financial institution in the world is doing. So it's like there seems to be this double standard, not just in consumers, where you have people, you know, outside of crypto saying, oh, like this Tether thing, I heard it's terrible. Meanwhile, they're quite happy to go to Chase Morgan that is doing the exact same thing, but no one's talking about it. And the other thing that really bothered me was the Attorney General's response to all of this. So announcing and saying, everyone, this thing is not backed. You know, there's been a cover-up. It's a scam. You know, having that sort of response where they went out of their way to cover the tracks of financial institutions in 2008 all the way through like 2012. Oh, 2012? Oh, that's not it. Yeah. 2012, like all the way through there, they're really covering things up. They're forcing institutions to accept TARP bailouts so that no one really knows which institutions are in the red and which ones are in the black. And they're not announcing anything in case there's a bank run. Whereas with the crypto scene, it almost seems like they're trying to incite a bank run and say like, they do not have all your funds, quick. Go. It just seems like a complete double standard there. What are your thoughts on all this?
Well, there's a lot of thoughts there.
A lot of thoughts there.
It came out that Tether said, hey, what's the big deal? We're 76% backed. So that's like a huge difference than they've been saying. So that is kind of a big deal for those of us who really hoped the crypto space would be different. So yeah, that's not great. But that's a very valid point, in that traditional financial or other traditional banks only have to be 10% backed. That's the whole point of fractional reserve banking. That's what the name of it is that you deposit money and then they loan out 10 times your money. It's how it works. That's how banks can actually create inflation. And of course, if you actually dig down deeper, it's way worse than that, because their 10% can actually be assets that are at another bank that themselves are fractional. So it turns out that most banks have somewhere between like 2 and 3% in actuality. And credit unions are actually worse. And if they're tiny banks, they're actually worse, yada, yada, yada. But that's a whole other topic and why we don't like fractional reserve banking. But the market, like it was, what I thought was very interesting, and if we're going to talk about a TA side of thing, was that so many people were talking about how crypto was just about to, or rather Bitcoin was just about to have its golden cross, which is when the 200-day moving average, or the 50-day moving average moves above the 200-day moving average, and things are great and we're in bull country again. But everybody was saying on this day, it's going to drop really hard once it does this, just like it did in 2015. And the day that happened is when the New York people announced their findings. Like,
isn't that always so convenient?
I find it, yeah, technical analysis, that's, reading chicken on trails. I understand, but a whole bunch of the cryptosphere loves it and swears by it. Right. And I just thought that was very interesting. Like they were just trying to push that panic button a little bit more.
You see that so much. I mean, I just remember back to when the Bit license, when they first had the hearings, and that was the day, like, I don't know if anyone was watching, keeping track at the time. I was at the hearings because I was covering it for a reason. And first of all, the hearings were just a joke anyway, because these people had no idea what they were talking about. They were politicians making rules about something they just didn't understand. They literally timed the arrest of Charlie Shrem to the day before so that the whole hearing was just taken over by this. Like the new word on the street was that they knew about Charlie for a long, long time. They waited until he was like in public, and they had all these cameras and everything. Like everything was planned for the highest visibility possible the day before the Bit license hearings in New York, so that they could cite that as an example. And it kept coming up. Like every second example they'll bring up, like all these technologists were like, yes, but it's great. It's going to help billions of people. It's a much better, safer system. And meanwhile, everything the politicians were citing, they were like, well, people like Charlie Shrem, he was just arrested, charges of money laundering, all of this stuff. And it was just so convenient. They really just time all of these things perfectly. And it's people just fall into it, right? They just lap that up. Oh, goodness me.
They do. And the worst part here is, so many people aren't big fans of Tether. I mean, Tether is not somebody that anybody in crypto really, really loves, right? I mean, they've had years to claim that, to actually have an audit, and they've just not done it, refused to do it. Had one guy sign a piece of paper at one point, nobody believed them. So it's not like this is surprising to anybody, as you said earlier. But at the same time, sure, they suck, but the New York guys suck a lot more.
Yeah, absolutely.
And it is interesting if you look at it, though, like all the other stable coins out there are currently above $1 in value, where Tether's below $1 in value. They're actually managing to stay on top of this and keep things moving.
I think that was fascinating because, I mean, as like all of the stuff that's thrown around about Tether, I'm of two minds about Tether. I'm not sure that I ever believed that they were completely. But at the end of the day, I'm not sure that it mattered because the peg seemed to work. It seemed that they had enough market confidence that it was working. Like they haven't really broken that peg. And even with all of this stuff flying around at the moment, it's still really stable. That's what you want out of a stable coin. People are like, oh, $850 million. That doesn't sound stable. It's like, oh, that's not the definition of stable. You should look at where it's trading right now, And I think at the moment it's like just over $1. Like it's been pretty consistent the whole way. Like if we start seeing fluctuations where it goes to like 60 cents and then like $1.30, and that's not a stable coin. That's a really bad tool that not many people are going to have confidence in. No one's going to buy. But despite all of this craziness, the market still seems to have confidence. Now, that doesn't mean the market's necessarily right. There could be dodgy things in there. It could fail in the future. We don't know. There are lots of things that could happen there. And then there are also, there's all this news that just came out, Chris, and I don't know if you wanted to go into that, about some periphery cases that are sort of linked to what the Attorney General was saying about Bitfinex. But I would say everyone just be careful out there. I'm definitely not going to give any trading advice, but from what I could see from the market signals, it seems that the majority of people still have faith in this, which is interesting, considering that the competitors are things like Gemini, that is citing themselves as like, we're completely regulated, we're completely organized. Or like, have you seen those advertisements around New York where every second bus stop and every second billboard says Gemini because crypto should be regulated? It's like, oh gosh, Gemini, like that's awful. But if they're the biggest competitor and they're not taking market share away from Tether, that's very interesting to me.
Yeah, I thought, well, I mean, one thing is Tether is everywhere. I mean, actually, if we go back to that whole market surveillance report, where'd it go? Tether still just has huge amount, like even their adjusted volume is, $1.4 trillion a day in trading, even though it's only, 8% of their actual of their reported volume. The closest actually is USDC at, 19 billion. I mean, just less than 1%, which is just insane. And that's the problem too. It's like, USDC, do I really want Goldman Sachs backed coin? I mean, is that better?
Yeah, I'm not gonna buy
come
that.
on, guys, like, I mean, I know your work, and Coinbase will give you $1 for each USDC, and you could do it, but still, like, these aren't the guys I want to win.
Yeah.
So
yeah,
but they are still doing better in USDT, despite the fact they suck. And we could talk about Bitfinex trying to offer a token sale over the next week for $1 billion. That's an oddly convenient number. Like, really? People are just going to give you $1 billion when you just had 850 million either seized or lost or whatever.
Well, I mean, so this is interesting. So if you look at these reports there, and you look at where is it here? I wish I had put this up in advance. So
Bank fraud.
okay, yeah, I can't find it, but the idea that they basically have these funds that they've kind of taken from Tether, but they have access to basically cover the customers' funds there. But then that line has been like it's been banned by, I think it was it wasn't the AG. Let me pull up the article. But basically, they're not allowed access to this line of credit that they've created.
Yeah,
it's almost like the Attorney General saying like, "Hey, everyone, Bitfinex is not solvent, bank run," and then they tried to find ways to solve that. The kind of unethical ways, actually. But then
the judge called him out on that too.
Yeah. But then that's been frozen now, so there's like no recourse. So now they're like, "Oh, we're going to do a token sale."
The whole thing, it's just, I mean, it's really frustrating how the New York people are handling this. They're trying to prove that things are bad by making them bad. It just, I mean, come on, guys. Like, I mean, yes, I agree that Tether should certainly have been more transparent up until this point, because come on, guys. But the AG are really like, they're trying to break them by freezing. It's like, why do they even have that right?
Exactly.
And then the judge is like, why are you doing this? You have until now to answer, or I'm going to revoke it.
Yeah.
So the judge is actually kind of going like, what the hell are you doing, guys? And which is good.
Yeah, I like that. So just to clarify that a bit more, because I think it gets confusing. Like, are the judge and the AG, like, are they on the same side? So, like, the judge has basically said that the New York Attorney General, who's frozen those funds, there's a judge that has said, kind of questioned whether they have the right to do that, and said, like, you'd better provide backup to explain yourselves. So that, I thought that was really interesting. So
Bitfinex and Tether asked the judge to, basically say, hey, show cause for why you're doing this. And the judge's like, yeah, that's a good idea. Maybe they should show cause. I think they'd have to before, but hey, whatever.
Yeah, exactly. Like, shouldn't those frozen funds be unfrozen until the Attorney General's office could actually justify why they want this order? Like, I mean, it all just seems so suspect, and it really does seem like they just want different aspects of crypto to fail. And there could be dodgy aspects to begin with, they could be shadier than other aspects, but really the government's just looking for a win at this stage, is what I'm getting from all this.
Yeah, and they think they have one here because they think that the crypto community won't object to what they're doing, because everybody hates Tether, right?
Well, they created. I mean, there's so much. We've talked about that before, but like, because we have all the competitors to Tether, I just can't help but think a lot of the FUD has come out too conveniently along the same time as so many competitors came out to Tether. It's absolutely right that Tether resisted an audit for a really long time. They tried to get an audit. The auditing company said, no, we don't understand this enough to actually be able to verify anything, so we can only give you like a 3/4 audit, but that other quarter we kind of don't get it enough. And that made sense to me at the time. It was really early days in crypto, but since then there seems to be a lot of companies that did manage to get an audit, and so it seems like it's not that big a deal. So there is some funny stuff going on there, but at the same time, I just feel like this is all a whole lot of FUD being thrown by government at the moment, and they're just really looking for a win. They're trying to get some low-hanging fruit of something that, as you said, Chris, is kind of looked down upon in a lot of the crypto community.
Yeah, I think they were trying to go for a low-hanging fruit here, and it seems, I hope they've bitten off more than they can chew at this point. That's my hope here.
Yeah.
But we'll see. But if anybody's watched that TV show Billions, we know it's all about really politicians and these, AGs and the people working in the office want to make a reputation for themselves, and they want to be able to get elected at a future rate, and yada, yada, yada.
It's like, when will people learn that, this government apparatus is all about individuals with their own self-interest, and people just don't pay attention to that. They're like, government, rules, protection, all of those wonderful things. So I wanted to welcome onto the show, Ash Oro just arrived. So let's go straight into the is it EOS or EOS, Ash? You can set the record straight, because Chris and I are having a dispute.
You know what's funny is there's no official way to say it, and we don't.
Well, he joined, but
you know what? Because it's decentralized, so we can do what I want.
I think it's like entrepreneur operating system. I'm not sure. We don't even know what know what it means.
Can you hear him?
Yeah. Can you hear him, Chris?
Oh no, I was just talking because I couldn't hear anything. Now I'm being a dick. Okay.
Oh no, yeah, no, he's talking. If you can't hear, then
let me rejoin just in
all
case.
right, you rejoin. And meanwhile, Ash, I want you to give us an update. So there have been some pretty exciting things going on with EOS, AOS, whatever is your fancy. So walk us through some of those announcements.
Yeah, so a couple of weeks ago, there was a big hubbub on Twitter about EOS resources and how expensive it is, and how many EOS tokens you have to stake in order to gain enough resources for a DApp to run its operations and its smart contracts on chain. And we were well aware of this. Resources are allocated much differently in EOS, which is a delegated proof of stake system, as compared to like Ethereum. The difference is in Ethereum, you pay a fee, and that's how resources are allocated. You pay the fee, you get the resources to do your transaction or to run your smart contract, and it's pretty cut and dry at that point. But in EOS, you stake your tokens, which then tells the network to allocate resources to you. But what happens when EOS prices are really high? Well, theoretically, you have to buy these tokens and stake them to get more access to the network to run whatever you're running. And so what happened was, about 10 months ago, the community came up with this idea with the help of Dan Lammer that we could have a pooled exchange, like a resource exchange, and we call this the REX, where anyone that is got EOS tokens, but maybe you're not running any smart contracts or you don't have a need for the blockchain resources, everyone can stake their resources in this big pool that can be used as then like a centralized, decentralized smart contract that just manages resource for people. So if you're a dApp developer and you need temporary resources, instead of going out and buying a whole bunch of tokens, you can just go to the resource exchange and lease them from other people who aren't currently using theirs. And then everyone that offers their resources to the exchange gets paid their percentage in a dividend from everyone that buys resources or borrows resources from the exchange.
So people in the chat are asking me to remind everyone who you are. I'm really sorry. I don't think I gave you like a welcome, Ash. So he's from EOS Radio, and he's also king of dance at karaoke as well. So that kind of sums you up, right, Ash?
Yeah, I think that's it. I run a voter proxy too called Freedom Proxy on EOS. But yeah, we're really excited. This REX, the resource exchange, has been in development for about 10 months now, and it literally just went live. The smart contract was deployed 2 days ago, and it costs 99% less now to access resources on the EOS blockchain. So if anybody was concerned about developers having to spend and stake a lot of EOS to get resources, it's 99% off sale right now.
That's pretty exciting. So these are big developments. I know that I like to kind of keep track of all the things going on across the ecosystem and have different people from different platforms come on the show to update. But this seems like a pretty significant development in EOS.
Yeah, it just created a lot more efficiency. We now have a proper decentralized smart contract that manages our resources and can help find buyers and sellers for this. So it's just a lot more efficient, and it's really cool that we get passive income dividends paid for offering up your resources too. So yeah, big improvements here.
Absolutely. And Ash, so I actually have an interview with Ash that is coming soon. There have been some hiccups, but that is coming soon. So I know I promised it a few weeks ago. But if people are wondering, like they don't know much about EOS and they want to learn more, that is coming soon. So hopefully it'll shed some light on this, and we'll have Ash back on the show, as he's become like a frequent correspondent talking all things EOS. So hopefully that's helpful for people in understanding what's out there in the crypto ecosystem.
And if anyone wants to get started with a mobile wallet, I recommend the Lynx wallet, LYNX. It's super easy. You can get signed up and set up in less than a minute, and then you can start signing in to dApps using your account. So yeah, the Lynx wallet, LYNX. I'm not affiliated with them at all.
Okay, that's good to know. So check that out. And Ash, I appreciate you coming on to let
thank
people
you
know
too.
about this update.
I listened to the whole show so far today, and I even sent you a Bitbacker question. So let's see if Bitcoin will put it through.
Oh no, it totally didn't come through. So
Bitcoin mempool is pretty full right now. So
I even paid like the highest highest whatever that BitPay would let me. But yeah, we'll see if it. I was like,
$20 fee, because
like,
if not, I don't know if it'll go through today.
It was like a 15% fee. I thought it would go through, but
God.
we've got about 10 more minutes. So here's hoping.
All right, so here's hoping. I'm
right.
keeping track on that to see if that comes through. Otherwise, Bitcoin Cash is super quick. Smart Cash is super quick. Litecoin super quick as well. If anyone wants to ask any questions, Bitbacker is the place to do it. And also, Ash, we should talk about getting EOS on Bitbacker at some stage. I think that'd be.
I would love it. Half-second transaction time.
Absolutely. So, yeah, well, Bitbacker, I mean, Bitbacker is completely voluntary. It's all done by people just volunteering their time. So it is hard to maintain a plethora of cryptocurrencies, which is obviously the ultimate aim of this site, so that it's coin agnostic and can serve a lot of different communities and be a space for content creators to earn an income there. But let's talk about maybe seeing how the EOS community can get involved to implement that. Smart Cash community is already involved and doing amazingly, and they've got developers involved and keeping track of things. And they've got like a little fund that helps content creators as well. And actually, so Chris, I know you wanted to chat about, there was an announcement with Smart Cash, so this may be a good segue for that. But I'll bid you goodbye, Ash.
Yeah, thank you, Chris. Naomi, thanks for inviting me on. I'll see you again soon.
Absolutely. We'll chat about Bitbacker later. All right, Chris. So give me that update on the Smart Cash.
Oh yeah. So a few months back, we talked about privacy coins, and I introduced Bitcoin Confidential to the user base, and talked about how Smart Cash holders would be getting an airdrop of Bitcoin Confidential. Well, a week ago, Bitcoin Confidential launched at its Genesis block, and we're almost 11,000 blocks in now. And so, if anybody didn't hear through anything else, make sure that you claim your airdrop Bitcoin Confidential. It is a 100% privacy coin. You cannot send coins to somebody else transparently. They all are confidential transactions. And trying out different taglines right now. I'm going with think confidentially. But I did a little video on that, and I'm sure Naomi will link to the.
Yeah, I'm just finding it right now. So keep talking. Give me another 1 minute to buy time and send that link to everyone.
Yep, I talk about the reason why both Smart Cash and Bitcoin Confidential work, and if as a 30-second overview, Smart Cash is for fast, easy, and cheap transactions, and that doesn't always work with fully confidential transactions, where Bitcoin Confidential is for when you don't want anybody to know how much you sent anybody else, or even that you did. So that is what Bitcoin Confidential is about. So we'll link to that video. We'll talk about that, and hopefully Bitcoin Confidential will find a way to be useful for people who really care about moving funds confidentially.
Absolutely. So I believe that we talked about it in our privacy episode, where we discussed the difference between different types of privacy, like difference between ring signatures and other things. So that's why Bitcoin Confidential, we kind of gave an overview of what that is. So I've just sent that link, and I'll also have that in the interview. Don't watch it now, because you're watching this show now. So now it's not a good time to click everyone, but it'll be in the description of the video.
And it was a very good week to launch it, even though we're not talking about it in our show. But the zero coin bugs that were announced over the last couple of weeks, I'm sure people who pay attention to privacy coins realize there's an inflation bug that's an issue with the core implementation of zero coin and ZK snarks. And that is a complete non-issue, because as you all might remember from when I talked about it, I'm not a huge fan of ZK snarks and its trusted setup requiring that signing ceremony that you just trust they got rid of the keys from. So.
Right. So let's move on. Still got a few things to cover in this show. One thing I want to mention is that the CFTC chair, so that is the US Commodity Futures Trading Commission, they've talked about this explosion of interest in crypto that is potentially going to be spawning new clearinghouses. And we've been talking about that for forever on this show, because that, for me, is one of the most interesting things of cryptocurrency, is not having to have those middlemen, not having to have all of your funds, whenever you use a bank, whenever you use paper, anything, it all just goes through the same clearinghouses. And there's this very murky, opaque system that's completely corrupt, and it's really hard to audit, because clearing things like clearing securities, clearing like payments, it all is so complicated, and it gets more and more complicated the more different financial tools there are. So it kind of becomes this wash, and no one really knows what happens there. I know a lot of people have spoken out against this, like Patrick Bird is someone who speaks a lot about this, and about he just has so much distrust of these clearinghouses, and no one talks about it.
With good reason.
Yeah, because it is so opaque. No one knows anything about it. And it's people are so tight-lipped about this because this is not information that people want to get out. But the good thing about crypto is it's peer-to-peer. You don't need any clearinghouse in order to determine, okay, now Chris owns that money. Naomi sent it, that now belongs to him. So clearinghouses is like a huge issue in crypto, and it's really interesting to see the CFTC talking about this and seeing that crypto could have a role in improving the system.
Well, it's actually very clear. One of the reasons that clearinghouses, there's so many issues with that, is when you buy a stock at, say, Fidelity or whatever, you're not really buying the stock. You don't control the stock. You don't own it. You just trust that A, whoever you bought it from actually has it, and B, that everybody's recorded the fact that you have it now. So there have been many cases where more stocks were issued than actually exist.
Absolutely. And I mean, that's what we were talking about earlier with all the fractional reserve, just not having the assets to back up all the stuff that's been promised.
But in the case of banking, fractional reserve is intentional and by design, as awful as it is. In the case of stocks, it's not supposed to be. It's supposed to be your share of that company, and that shouldn't be able to be diluted by somebody screwing up record keeping.
It seems like a very convenient design for someone who wants to create the illusion of a limited supply, but then make a lot of money. Like, there's so many layers of things wrong with this current system. So I'm very excited about crypto and their involvement in making clearinghouses a non-issue.
And with tokenized securities, tokenized assets, clearinghouses become redundant. So you can actually own your stock and your share in that company, where clearinghouses like, Ledger is kind of one where they're trying to become a clearinghouse for these institutional people and offer custodial services for them with either their fancy custodial device or even just directly. And Coinbase is kind of the same way. So it's going to morph that whole thing. But in the future, I fully anticipate that all stocks will be issued as a token on a blockchain. And when you actually buy one, you're actually going to own it. Or somebody you stated is your representative will own it for you.
Yeah. So I want to just read the quote here. So it was actually the chairman, Giancarlo, who testified on this and said in his open remark about make comments about clearinghouses. He said that they are the critical single point of risk in the global financial system, which is totally true. It's such a risk vector. And then he goes on to say, like, the importance of these examinations to overall financial stability are increasing, referring to examining how all of this works. And then he goes on to say, like, the Commission anticipates new applications for clearinghouse registration resulting from the explosion of interest in cryptocurrencies, an area in which protection of the cryptocurrencies will be one of the highest risks. That's interesting, where he says protection of the cryptocurrencies. What do you think he's talking about there?
Well, two sides of things. One, if in the case where assets are issued on a blockchain, well, you have to protect the keys so somebody else can't come along and take that asset. But two, he's thinking where these clearinghouses actually hold cryptocurrency and you have to control that. Whereas, in the case right now, if somebody breaks into a clearinghouse or hacks into a clearinghouse and messes with their ledger, there's no chance that they're going to walk away with actual stocks in that situation, or very low chance at least, because they can trace everything back and there's always a higher authority that can say yes or no. But with Bitcoin, there is no higher authority. With most crypto, there is no higher authority, where you can't, if somebody makes a transaction with your keys, it's gone. There's nothing you can do. So that's what he's worried about in the case of cryptocurrency. At least
I feel like it just belies this lack of understanding about how crypto works. This idea that there have to be these warehouses where this information is stored that could, someone should teach him what a smart contract is.
Remember the Wyoming law that actually had to change so you could hold your own assets. So they're still operating under antiquated
laws. It's a new word here, new vocabulary introduced every day on NBTV. No, it's like it's this fascinating world where people are still looking through the prism of these archaic structures. And you're right, like this idea, like Wyoming recently passed a law where they allowed individuals to have custody of their own digital assets because there were financial institutions that wanted to force a law that said things have to go through people who are licensed to hold crypto, you know, who have, you know, who can protect your assets and all this. But really what this is just people trying to increase the stronghold of people in traditional finance who do this with, you know, currently with stocks and things like that. You don't need those in crypto. And that's what I think people haven't wrapped their head around yet. Oh, your thing is on mute. I don't know why. All right. I'm going to take the opportunity to mention that someone just sent through $5 in smart cash. Thank you so much. It is Archer's Bullseye. Has not actually recommended that you requested that you put on your Viking hat. Zaphoid, he did that a few episodes ago. That was great. I'm always up for people sending through power chats and making outlandish requests, and they will be fulfilled because they're here to please on NBTV. He says, great to see you and Mrs. E back at it. I hope he knows his green screen is really green. Don't tell him, Archer's Bullseye. He thinks there's like a green screen background there, and I just thought we'd go with it because I think if he knew his green screen was literally just a green screen, he might get sad. So I wasn't going to tell him. So let's just keep that between you and me. So Chris, what were you going to say about the something?
What was I going to say about something? I got distracted by the green screen.
We got distracted. So basically, I mean, this idea that people are forcing us to use these intermediaries, and now the CFTC is saying, well, we must have laws that protect ownership of all these things. I think it really misses the fact that blockchain enables all of this amazing new handling of these assets where you don't need these clearinghouses. It's not just a matter of saying this could be great for clearinghouses. We could have better records. It's saying we don't need clearinghouses. This is antiquated. This is something that we're making superfluous and it's unnecessary now. So I think it's going to take a long time for people to get their head around that.
It's like technology has finally caught up with the olden days where you'd go to a company and buy a piece of paper stock, and that was the stock you held. And now you can just go to the company and buy your token, and that's the token you're holding. So I think it's going to, but of course that's what the ICOs were all about, yada, yada, yada. But I think it's going to change a whole bunch of new things, and I can't wait to see where that goes. I really can't. And I think a lot of that topic's going to come up on your sister show, the Cypher Street, I think.
Absolutely. Yeah. So I want to move on. Still got a couple more things that I just want to mention briefly before we end for the day. And there's so much news to cover. I feel like we could go for several hours, but no one is going to be able to find time to sit and be like, oh, a 4-hour video. Let me just take out half a day. So we try and compact it so you can just get easily digestible news. So let's just breeze through these. Facebook confirmed that they're building a cryptocurrency-based payment system. This is something we predicted ages ago. This is not news. They have Facebook Cash, which is just using the traditional system. Blockchain could obviously help cut down their costs. So this makes a lot of sense. Also, I'm sure we're not a fan of Facebook. So I'm sure there's not much more to say about this. Any closing remarks on that topic?
Something, Evil Corp, something.
Something evil called something. All right, moving on. Washington state law recognizes blockchain records as legally valid and enforceable. This is really interesting. This is something that China did about 5 months ago, I believe. And this was interesting because China's always had a fluid, strange, contradictory relationship with crypto. But they were saying like that blockchain could be used in courts as like to show chain of custody, like all these kinds of things, that it was actually legally enforceable. Now the state of Washington has just passed a bill that recognizes and protects the legal status of electronic records pertaining to distributed ledgers and blockchains. So that's really interesting and definitely a great step forward.
Yeah, basically, if you're using a transaction or something on a blockchain in court to help prove something, they can't discriminate against it just because it's on a blockchain.
Yeah, and I mean, as we know, like blockchain seem like a much better way to store records than to trust a third party, like especially when you're looking at corrupt governments who are maintaining records and control of like deeds and all kinds of things. I mean, having blockchain seems like a much safer way to store that information than having to trust systems that can be easily corrupted.
Exactly, and it seems inevitable that more and more records will be stored that way.
Absolutely. Let's move on. I want to mention Brave. So I use Brave. I signed up ages ago trying out the BAT token. And it seems that they have just reached 1 million downloads monthly. They've surpassed Firefox, Coinbase, Binance. It's pretty impressive growth there. And everyone was kind of poo-pooing Brave and saying, oh, BAT, it's not going to work. Like there were lots of issues there, but it does seem like it's gaining popularity.
It does. I'm all for that. Interestingly enough, the other news regarding Brave was that Gab forked Brave because Gab AI had their Gab being the Twitter competitor that's supposedly more pro free speech, et cetera, that's had issues with Coinbase specifically, among others. And because they have their Dissenter plugin that was removed from the Google and Firefox store because God forbid you have the ability to comment on sites they might not want you to comment on them. So Gab apparently forked it because they want their own integrated browser so people can't remove them from a browser. I mean, basically, it's just following Gab's method of being fine. You won't let us be on your own, on your social network. We'll make our own social network with hookers and blackjack and yada, yada.
Hookers and blackjack.
That is a Futurama reference in case you're not getting it. Sorry, whatever. I'm old. And so this is just Gab continuing doing the same thing. And that's going to be really interesting too, because, one of the things like Brave started off using Bitcoin, but it's frankly too slow and expensive to use for microtips. So they have their own token on ETH, where, now there's a whole bunch of other blockchains. So it would be possible for a lot of these other cryptocurrencies to essentially fork Brave and then use their own crypto in it.
Yeah, no, it's definitely interesting, and a lot of people I think were poo-pooing this because they're like, why does the browser need its own token? Why don't you just use an existing one? Why do we want all these different ecosystems? But we're kind of learning that these different ecosystems, it doesn't matter that they all have their coins as long as there's enough liquidity and usage in there that they can get traded. It seems like they can coexist, and that's what we're kind of learning. Maybe they eventually won't. We kind of don't know what happened, but what we've seen so far is that a lot of these ecosystems are coexisting fine, and that's interesting to me. I don't mind getting Brave tokens. Like if it was like Naomi coin and there was like no market, no demand for it, it'd be like, oh, thank you for this useless Naomi coin. But instead, there seems to be a lot of people using this, and enough to create enough traction that it's listed on exchanges. You can transfer it into this, so it's not a useless thing at all, and it actually is a huge help to content creators who want to monetize and get out of the Google stronghold of internet marketing and monetization.
Yeah, I'm very thrilled with all the different ways that even though we're on YouTube, that YouTube creators and various creators can go and use to get financial backing outside of the corporate infrastructure that exists, because that's what has to happen. As the more and more we do this, the more and more we don't say what's approved, the more and more Google and Facebook and Twitter and whatnot will censor us. I mean, you had a video demonetized a couple of weeks ago.
I have videos demonetized all the time.
Yeah.
So that's why I love Bitbacker. That's why I love all these other alternatives like BAT and donation sites and Steam, and that just helps content creators like me. I'm always trying to spread the word that there are options out there. And yeah, we are on YouTube at the moment. Thank you, YouTube, for this service you're providing us. Generally, I like to restream across all kinds of different platforms. This automatically gets uploaded to BitChute, to library.io, Steam it, all kinds of things so you can watch it. Generally, I like to actually go live on DTube Live as well, DLive, sorry, I should say. But I'm traveling at the moment, so I can't currently with my computer setup. But once I'm back with my other computer, then I will be able to do that. Let's move on because I've just got a couple more things, maybe just one more thing that I want to cover quickly. So Japan, looking at providing the G20 with regulation solution for crypto. That's really interesting. to me. So they basically have said that they're going to be they're drawing up its manual, described as like this handbook of cryptocurrency governance and proposals and justifications, mainly focusing on exchanges in particular. But they're basically hoping to implement systems to protect consumer assets, international security protocols, systems that provide customers with information, particularly in the event of a hack. Like, they kind of got all of these, this guidance they're compiling that they're going to be giving out to hope to get some sort of a world standard in the treatment of crypto. I thought this was interesting and worth mentioning, just because, in my opinion, I hope it doesn't happen. You know, like, it seems good on the outset. This nice idea, let's get some standards, let's kind of get on the same page and all this. On the other side of things, I think what makes crypto work is that if one country shuts it down, then it doesn't stop. There are other countries that you can go to. There are options out there. Now, if everyone suddenly got on the same page and was like, let's all treat crypto the same way, then there wouldn't really be the same usage, right? It would severely curtail the usage of crypto. It would go back to the severe fringes of society, people who are able to curtail government regulation. But I think there are different issues here. Like, I think that trying to get a global standard gets me thinking of like the IMF, which is this incredibly corrupt, disgusting institution that basically has a huge amount of leverage on different policies that countries all over the world implement, because they offer this sort of carrot and stick method of, we can either give funding or we can take it away. Therefore, you know, toe the line, otherwise we can severely impact your economy, sort of thing. So I don't like the idea of having these kind of global entities or global agreements on these things. But I don't know, Chris, what are your thoughts on this?
Well, Japan itself is interesting. Remember, they had their fifth largest bank use XRP, then bail on it 6 months into the trial. Their largest bank, the Mitsubishi UFJ Financial Group, is going to launch its own coin like JP Morgan coin, though they want it to be used by individuals, not just banks. JP Morgan coin itself is expanding to some Japanese banks. So, you know, Japan's kind of at the heart of this. They legalized at least Bitcoin to be used as money back in 2017, but they're also pretty harsh on exchanges. They've made exchanges remove Monero in the past, like early 2018. There were several Japanese exchanges that had to delist Monero because of regulation. So Japan itself is a very mixed bag. And I certainly don't like the idea of international regulation mirroring what they're doing. And I'm certainly not a big fan of a one world government controlling how everybody can use money worldwide, which is what this kind of thing is hinting at. But then again, that is what crypto's about. And they can, you know, the phrase, you know, the tighter they grasp, the more coins will slip through their fingers. You know, that phrase has been going around in a bunch of different groups in a bunch of different contexts today. And I think that's what we're going to be seeing over the next several years, as places like Australia and Europe and the United States are somewhat cracking down and somewhat trying to squeeze out the competition for cryptocurrency as they're looking at the future, looking at lower and positively negative interest rates and possibly trying to create a cash-free society. I just feel the more that happens, the more people will gravitate towards cryptocurrency. And it's just going to be a race to see if they can shut things down fast enough, which I don't think they'll ever be able to do, because that's just not how human nature works.
We can hope. So, yeah, I mean, it is interesting that they're trying to get this global consolidation of all of this. It really does seem more like global consolidation of power. As you said, you know, we really don't want the rest of the world mimicking the way that Japan has reacted to cryptocurrencies. So, and I don't see, you know, Russia and America and China and you know, Switzerland and Japan, like, all just suddenly shaking hands and saying, yes, let us all come to agreement on this thing. I mean, have they ever come to agreement on anything? So I don't think this is an issue, but I don't know, maybe this could be the thing that they can all agree on. None of them like to lose power. You know, we'll have to wait and see what happens here. So as we close up today, because we've covered a lot and we are over time, let's just talk a little bit about the price. We saw a giant spike in the last 24 hours. We're currently trading at over $6,000 for BTC. And the reason I mentioned BTC, I mean, there's so many cryptos out there, but everything in the market is so heavily correlated. So it really does provide a signal for how the crypto ecosystem in general is doing most of the time. So I just wanted to mention that. I'm sure there are lots of happy people seeing this bit of a spike.
Yep. Yeah, we're up to, as of me checking right now, 57.83 according to our favorite site to hate, CMC. Bitcoin dominance is up to 55%, so it is actually gaining against the altcoins, which is normal when big spikes happen. Mm-hmm. It quite often will go up first, and then everything else will follow it up. And a few coins, Bitcoin Cash, Litecoin, EOS, as we talked about earlier in the show, are actually gaining against Bitcoin, at least when you're looking at the top 10. Yeah. So I'm positive. We always like to see green days. It always makes us smile. And
is that why you've got the green backing today, Chris?
That's it. I'll change it to red on those sad days.
Oh no! And like frowny faces as well, just like.
Wah, wah, wah. But it's interesting, and it has been a big sentiment that we are through the bear, and we had, as I mentioned earlier, that golden cross. We are continuing to move up. What this means long term, it's hard to say. Are we definitely through the bear? No, I wouldn't say so. But and there's plenty of people who still say, "Oh, we're going to drop to 1,000," and always keep in mind that. From my perspective, it may be very likely that assets like cryptocurrency will actually drop at the start or through the very beginning of a next financial collapse, just like gold did during the last one, because people flee the stock market to treasuries, which strengthens the dollar. So keep in mind that a global financial pullback could negatively affect crypto, at least initially.
Right. Yeah.
So just always be aware of that as things are going on. And I will never give financial advice ever, because I'm the least financially qualified person among us. But I just try to see what I can see.
No, I think it's all very helpful to keep that in mind, how correlated all the markets are, not just within crypto. Just be aware. As we close up, I want to give a huge thank you to Dancing Crypto. He just sent who really knows? I don't know. I made a mistake the other day. Got to tell you a quick anecdote. Someone messaged me on Twitter and said, "Hey, you actually interviewed my daughter at the Taylor Swift concert." I'm like, what? And so there was this great thing. I went to Taylor Swift concert, and I'm like, know anything about crypto? And everyone's like, no. And I said, if Taylor Swift made her own cryptocurrency, would you get it? And everyone's like, yep, which I thought was awesome. But there was this one girl who, I was like, do you know anything? She's like, yeah. So, I mean, there are different types of cryptocurrencies. There's like Bitcoin, there's like Dragon Chain, just going on about it and saying that her mum is really involved. Anyway, long story short, this kind of went off track. But this person wrote to me and said, yeah, you interviewed my daughter. And so I found her, and I was like, oh, I'm talking to your dad. I totally just made a gender presumption there. Don't assume my gender. And it wasn't. It was her mum who was really into it. And I thought that was really awesome that they found, kind of connected after we did this interview. So that was that was pretty funny. I forgot why I was doing this. Oh yeah, I was talking about Dancing Crypto.
Yeah.
I don't know why I went off on that tangent. I'm really sorry, guys. Crypto said 5,000 Bitcoin for all the news, waving at you from Oakland. I'm waving back at you, Dancing Cryptos. Really appreciate that. And also a huge thank you again to Archer's Bull's Eye, who sent through the $5 in smart cash. I really, really appreciate that as well. What were you going to say, Zappoid? I cut you off.
No, I was going to say I was going to guess that your misgendering issue was from your travels of where you are right now, because that seems to happen a lot there.
I think
your story was much better.
My story was really great. Thanks so much for listening, everyone. All right, I'm going to let you all go. This is always the highlight of my week. I love hanging out with everyone here. Chris, thank you for being on the show. I really appreciate you sharing your wisdom, expertise with all of us. And Ash, who's not here anymore, thank you very much for joining us and being our EOS correspondent. Really appreciate that. And then finally, a huge thank you to everyone in the chat. You guys are just so awesome. I love chatting with you all. You're just the best, and I hope you have a wonderful weekend. Go and enjoy the rest of your afternoon and your weekend. And as always, if there are any topics you want us to cover throughout the week, then let me know. Anything that you think is pertinent and you want to hear a different perspective, or you want us to interview anyone, then let us know. Thank you all for being here. We'll catch you later.
Sayonara.
Yeah. Wait, did I read Dancing Crypto's thing?
Yes, thanks for the news, waving you from Oakland.
Okay, cool. I just thought I'd do like a false ending, continue it a bit more, end it. All right, definitely going this time. I love you all. Have a wonderful weekend.
Peace out.
Bye.